Hashtag how to lower interest rate on mortgage without refinancing. Most homeowners ask the wrong question. Because in a lot of cases, you cannot truly lower your mortgage rate without refinancing. But you can lower your payment, lower your total interest, or both. And that is where things get interesting. If you have been staring at your mortgage statement thinking, there has to be a way to make this cheaper without going through a full refinance, this is for you. In this video, I'm going to break down what is actually possible, what is not, the difference between lowering your rate and lowering your cost, and the one move a lot of people miss because they are focused on the wrong number. Let's start with the truth nobody likes hearing. If you have a fixed rate mortgage, your interest rate is usually set when you take out the loan, and it does not change just because you call and ask nicely. This is not like a credit card where you might talk your way into a better rate. A fixed rate mortgage is built to stay fixed. So if your whole plan is, I'll just ring the lender and ask them to shave off 1%, that is usually not how this game works. With an adjustable rate mortgage, though the rate may go up or down, according to the contract, the index, the margin, and any rate caps. So if you have an arm, a lower rate can happen without refinancing, but it happens because of the loan terms, not because the lender suddenly felt generous. That right there is the first big shift. Stop asking only, how do I lower my interest rate? Start asking, what exactly am I trying to improve? Because there are really three different goals hiding inside that one question. Goal number one is lowering the note rate, the actual contract rate. Goal number two is lowering the monthly payment. Goal number three is lowering the total interest you will pay over time. Those are not the same thing, and mixing them up is how people miss the best option for their situation. So let's talk about the few real ways to lower the actual interest rate without refinancing. The first is a loan modification. This is the one people usually do not want to hear about because it is most often tied to hardship. A mortgage loan modification can involve extending the number of years to repay the loan, reducing the interest rate, and sometimes changing other parts of the loan to make it more affordable. That means, yes, a modification can truly lower the rate without a refinance. But this is not usually a casual, better deal request. This is more often a relief option for borrowers who are struggling, facing delinquency, or trying to avoid foreclosure. So it is real, but it is not the same thing as shopping for a cheaper mortgage after rates fall. The second real way is if you already have an adjustable rate mortgage and your contract allows the rate to move down when the index falls. If broader rates fall and your loan terms allow decreases, your mortgage rate may reset lower without you refinancing. That is a true rate drop. The catch is obvious. It only applies if you have an arm, and not every arm drops as nicely as people hope. Now here is where most homeowners actually get relief, not by lowering the rate itself, but by lowering the payment or the total interest burden. The first big option is a mortgage recast. A recast happens when you make a lump sum payment toward the principal, and then the lender recalculates your monthly payment based on the new lower balance and the remaining loan term. With a mortgage recast, the monthly payment changes, but the interest rate and remaining term usually do not. That means a recast does not lower your rate, but it can lower your monthly payment without the cost and hassle of refinancing. And that can still feel like a huge win if rates today are higher than the rate you already have. This is where people get tripped up. They say, but I want a lower rate, not just a lower payment. I get it, but money does not care what label you put on the win. If your goal is breathing room each month, a recast may solve the real problem even though the rate never changes. It is kind of like wanting to lose weight and finding out your jeans fit because you changed your habits, not because the scale moved dramatically. The result still matters. Another option is making extra principal payments. This also does not lower your contract rate, but it can reduce the total interest you pay and help you pay the loan off faster When you send extra money to principal, your balance shrinks faster, which means less interest has time to build up. Your rate stays the same, but your total cost goes down. And honestly, this is one of the most underrated moves because it looks boring. There is no big announcement, no new loan, no exciting paperwork. You just quietly reduce principal and let math do the heavy lifting. It is not flashy, but boring mortgage math is often where the real savings live. Then there is PMI. This one is sneaky because it does not lower your mortgage rate at all, but it can lower your monthly housing cost in a way that feels almost the same. If you have private mortgage insurance on a conventional loan, getting rid of it can reduce your monthly payment. So if part of your mortgage payment feels painfully high, check whether PMI is still in there and whether you qualify to remove it. Removing it will not change the rate, but it can cut the monthly bill without refinancing. Now let's get to the real problem. Most people chasing a lower mortgage rate without refinancing are usually trying to solve one of two pain points. Either the monthly payment feels too high, or they hate the thought of paying so much interest over the life of the loan. The mistake is treating those two things like they need the same solution. They do not. If the pain is the monthly payment, then a recast or PMI removal may help more than obsessing over the note rate. If the pain is long-term interest, extra principal payments may do more for you than a recast. And if the pain is true hardship, then a modification may be the only path that actually changes the rate without a refinance. That is the key moment. The smartest move is not asking, how do I lower the rate no matter what? The smartest move is asking, what number do I need to improve most right now? Because once you ask the right question, the options get much clearer. If you have a fixed rate mortgage and you are not in hardship, the honest answer is that you usually are not going to lower the actual interest rate without refinancing. That is just the truth. But you may still be able to lower your monthly payment through a recast, lower your housing cost by removing PMI, or lower your lifetime interest by making extra principal payments. And if you have an ARM, your contract may allow the rate to move down on its own when the index falls. So if you want the simplest version, here it is. If you need a lower actual rate without refinancing, look at whether you qualify for a loan modification or whether your ARM can adjust down. If you need a lower monthly payment, ask your servicer whether a recast is available and whether PMI can be removed. If you need to cut total interest, send extra money to principal and make sure your servicer applies it correctly. That is how you stop chasing the wrong fix and start making the mortgage cheaper in the way that actually matters to your life. Watch the next video to learn when a mortgage recast makes more sense than refinancing.